All right, today we are going to discuss health ratings with respect to whole life insurance policies designed for maximum cash value. Let's get on into it. Have you ever been interested in a whole life insurance policy, but you thought, I've got some health issues and I think it's going to be expensive? This is something we hear quite a bit. And frankly, if you're just shopping for life insurance and you do have health ratings, typically the premium will be higher for the same amount of death benefit compared to an individual who does not have any health issues. With that said, if you're interested in a whole life insurance policy designed for maximum cash value, it's actually not that much of an impact if all things are designed properly, meaning everything's maximized for cash value. So let's get on into it. When it comes to a whole life insurance policy, or any type of life insurance policy, there are several different categories or different health ratings that you can receive. Here's the most common. We've got ultra preferred. That's the best class. Some companies call it super preferred, preferred plus, best class, top health rating possible. Then I've got regular preferred, second best class, standard non-smoker. Those are the most common. Then I see some ratings underneath. If I'm a smoker, I could receive a preferred smoker or standard smoker rating. Not all companies offer preferred smoker rating. Some just say, hey, if you are a smoker, all we offer is standard smoker. And then also, we've got the red here, meaning a red flag goes up from a cash value accumulation standpoint if I have a rating or extra charge. I'm going to explain exactly what that means. What we've got here is, in the beginning of this video, I mentioned if a policy is designed properly, there's not much impact on the cash value performance. So I just want to emphasize that again, and then I'm going to get into what these percentages mean. If you are purchasing, for example, a death benefit for $1 million, what you'll find is the worse the health rating is, the higher the premium will be. For example, if I have an ultra preferred rating, the premium might be $10,000. Whereas if I receive a standard non-smoker rating, well, that could result in a $12,000 premium. And if I'm rated, it could really go up, or if I get an extra charge. Now, with that said, that is an approach, frankly, I like to throw out the window. And the reason why is just about everyone we work with, again, is interested in maximum cash value. So let's assume that you are looking to pay in, use a nice round number, $10,000 per year. And this could be $100,000 per year, $1 million per year. It really doesn't matter as long as all things are equal here. The premium is as low as the insurance company will allow. Let's assume we set it at $1,000. That's going to purchase you a certain amount of whole life insurance. We'll add a term insurance rider as well in most cases. And then we'll throw the other $9,000 into PUAs. So your total payment is $10,000. But in all examples, regardless if you have an ultra preferred, regular preferred, or non-smoker rating, you've got a $1,000 premium and a $9,000 PUA payment. So all things are equal with respect to maximizing the cash value on your policy. If that's the case, the design, all things are equal there, then what you'll find is there's not a huge difference when you look at the actual cash value growth. So ultra preferred, which is the best health rating class, to get that, often I need to be in perfect health, right? All things are great with me, and I've got a clean family health history as well, meaning there's no chronic heart disease or cancer cases in my family. Usually they look at immediate family, my parents, sometimes grandparents, but if I've had, like my parents, both of them had cancer, my grandparents had cancer, and it's really in my family, say my siblings did as well, that's where I might be healthy, but because there's so much cancer in my family, I've seen this occur before, the rating gets downgraded to regular preferred. Not all companies do that though, but just for additional awareness there. But ultra preferred, I've got to be healthy, and family health history has to look good. Let's assume that you have a policy designed for maximum cash value, you get an ultra preferred rating, and just for the sake of simplicity, the internal rate of return is 5%. Now, let's assume you take that same policy. We think you're going to get ultra preferred, but there's something in the health history or some kind of issue that pops up and you get a regular preferred rating, which is not bad at all. That same policy will produce anywhere from a 4.85 to a 4.9% internal rate of return. Meaning the difference in performance is typically, from experience, 0.1 to 0.15%. And this is on actual cash value growth year over year when we compare illustrations and, most importantly, actual performance based on real data. But that's typically the difference there. So it is not that huge, not as drastic as what a premium increase would be if I got a rating that I didn't expect. It goes up based on the same amount of life insurance purchase. This is different when the design is equal. Standard non-smoker rating could be 4.6 to 4.65%. Now, if I'm a smoker, you will see a significant dip in performance there, right? And sometimes it's more than that, to be frank. It depends on the company, the design of the policy, but smoking typically does negatively impact the policy. I want to add something here, though, because we get questions on this, is if you smoke cigars only, that will not always give you a smoker rating. Companies, depends on the insurance company, will typically allow between 12 to 24 cigars used per year. If that's the only type of tobacco that you use, cigars or nicotine. If I use more than that, they'll still assess a smoker rating. Depending on the carrier, 12 to 24 per year, I could still get a non-smoker rating, which is true, which is nice. Same thing applies with chewing tobacco. Some companies will assess a smoker rating with that, where others will say, hey, we'll still give you a non-smoker rating. Often I will not get a preferred rating if I smoke cigars or if I chew tobacco, but I can get a non-smoker rating, which will save me quite a bit in performance there. If I receive a rated or extra charge on my policy, that'll impact it quite a bit. So what this means here is rating. There are 16 different categories. And some companies use letters of the alphabet. And this means I've got a health issue and the insurance company feels that there's an additional risk with taking a policy out on me and the internal expenses are going to be higher. So for example, I could receive a class 2 or a table B, which actually mean the exact same thing, and that will severely impact the performance. Whenever this happens, what we'll often do with the individual we're working with is show a standard non-smoker compared to the table B, and then show the actual cash value difference. This way you can make an educated and informed decision really to know, okay, do I still want to do this, or does the poor health rating kind of make it a turnoff and it's just not a fit? Which it's much better to know that before starting a policy as opposed to after. So that's a table rating there. And then extra charge, this typically occurs if I'm involved in high risk activities, like jumping out of airplanes, right? If I'm skydiving, parachuting, parasailing on a regular basis, if I'm jumping off cliffs, maybe I'm motorcycle racing, anything that's considered a high risk where my life could be potentially at danger, that's where an insurance company may assess an extra charge there. Also, if I am employed in a high risk activity, maybe I am a pilot. Commercial pilots are typically fine, but if I'm flying anything that's military related, we've had this happen before where I can have an extra charge there. It's good to have awareness on that. With all of this said, every situation is unique, and we've had so many cases where individuals thought, I'm going to get an extra charge. I'm going to get a table rating. It's not going to work out. And then we get preferred or ultra preferred and all things are great. So I would always recommend asking your agent. I will let you know that we as a company can always share our experiences with you. And in addition to that, we do have field underwriting guides from companies and from their underwriters that state if you're involved in this particular activity or if you've had these health ratings in the past, here's the rating you will most likely receive. And that's a nice feeler just to get some awareness on any health issues you might have. Now, to sum this up, what I want to add here is, did you know that you can upgrade the health rating on an existing policy? This is a beautiful feature many people are not aware of. Meaning if you take a policy out, let's pretend for a moment that you take a policy out at the age of 35. So 35 years old, and you get a standard non-smoker rating. Maybe you've got some minor health issues, maybe you're a little bit overweight, whatever it might be, you get a standard non-smoker. Years go by, you get in shape, you have no health issues, you used to be on medication, now you're not, and let's say it's by the time you're age 40. You say, hey, I've got this old policy, which I've got that non-smoker rating on, but Steve, I'm healthy now. Is there anything I can do? The answer is yes, and here's the cool part about this. A lot of people aren't aware of it. We've had this happen a number of times, but you can actually upgrade a rating. Let's assume that at age 40, you upgrade your health rating and receive an ultra preferred rating. That upgrade will actually date back to when you first started the policy, so it's still based on the age of 35. The premium is repriced, and you'll see a nice jump in cash value. We've seen this happen with a couple companies on a number of occasions, which is nice. Now, here's the thing. In order to receive that health rating upgrade, I have to go through the same underwriting process that I originally went through, which consists of a medical exam. The company will order medical records. And let's say my health is worse. Let's say they discover a major underlying health issue. When I go through this again, they cannot downgrade a rating once a policy started. So that's locked in your original rating no matter what. But if things are better, you can actually upgrade the health rating now, which will actually result in a boost in cash value performance, which dates back to day one, meaning going back to this example, the policy will perform exactly the same as if day one I received that ultra preferred rating, which is pretty neat. So I hope you enjoyed this video. I know we talked quite a bit there about health ratings with life insurance policies, but it is good information to provide awareness around, only because we have heard a number of times, and I get it 100%, like, I don't think I'm healthy. I'd like to wait until I get in the best shape of my life to apply for a policy. You can do that, but you don't have to. We've had people that apply now, they get things started, then they get in shape, and then several years later they upgrade it. And it's as if they started day one with that ultra preferred rating. Hope this helps. Hit the like button, subscribe for more if you enjoyed it, and we'll talk to you soon. Thanks so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.